What's up, guys? It's your boy, the Purposeful Trader here, and I'm excited to have you guys with me today in the Purposeful Trading Academy. Today we're going to be talking about something called resistance, support, right? How and when to know to buy breakouts and sell them. So, first of all, a breakout is when a stock breaks past a key level above it. So, let's look here. This stock, um, it did what we call a gap up, which simply means um, the stock actually went up and opened up at a higher price than the previous day, which means it gaps up. And that gap up can kind of look like this. And I know you're seeing me on a different chart. This is a Yahoo chart. And down below, right here, you should be able to see the time. It's a 5-minute chart. And you can always change that with this interval. But I'm watching a 5-minute chart of the Sava trade. So the first time Sava, this chart went from all the way from like 19 to 100, 135 in a few days, which was crazy. You know, over 10 times your money. Most people didn't stay that long, and neither did I. But it wasn't about. It's about when to buy, when to sell. It's not about holding and hoping that it goes up another 100%, 1,000%. That's not what it's about. For me, it's about things like this. This is a base. You look for a base. A base is like a floor, right? If the overtop is the ceiling, think about it. The bottom is a floor, and the more you see it base, which means it may test lower than that level, this general level. This general level is about 33 bucks. As you can see in this long wiki, and in the open, high, low, close on the left hand side, right over here, it did go under 33. It went to 32.06, but it held. Now I'm not buying here. No, I'm buying on the breakout. This is the level. You see this line. As soon as it crosses 35, I want to buy the breakout, and I'm going to risk. I already have my risk in mind, which is this base level. Now, even though it's $3 a share, with the stock being up, being a high price stock, $2 a share is not, too much when you're coming down to a $33 stock. So when I see this, start to break in this area around 40, I'm going to start getting out of my shares. Why? Because once you start to see a huge push past the ceiling, it usually always, a stock in some form will have to pull back. You don't know when, but once it has what we call a super extended push like this, it's like a rubber band. It may go out for a while, but it has to come back and pull back. And that's what it did. It pulled back. And now you're looking at this red line, asking what this red line is. This red line is what we call a VWAP. VWAP, look it up. Volume weighted average price, which means the average price that most shares are going for, right? And it'll be explained a little bit more, but this right here, as you see, it goes under VWAP and tries to come back over VWAP and tries the base and come back to that high. My bad, y'all. Got me clicking stuff. But try to go to the base, fell through. So this is what we're looking at. That's why I say you buy the breakout, you risk the base level. You buy the breakout down here, and you risk the base level down here. Because it's simple. That's what a breakout is. And that's what I want you guys to be familiar with. Breakouts with big volume. This is 2 volume, but if you multiply that by 10 for a smaller stock between $2 and you know, maybe $5 or $7. Um, then you'll be getting the right volume for a breakout of a smaller stop. But that's what a breakout looks like. It's just simply a breakout over the past highs. And the great way to have a good risk reward level is to just simply risk the base or the floor. That's what, think about it. If your floor where you're standing at right now collapses, would you be staying in that room or would you start running? Exactly, run. So in the same way, if this base level starts to break down, um, and I'll give you an example. Later on, after this huge push, you start to see the base level start to fall. Start to trying to create a base level here, and guess what? It's starting to break through. Now, the moment that I see this pull here, I'm out because it's supposed to be holding at the 64 to 62 range, right? And it's not. Uh, and if you start to see that, then guess what? It's over. So, right here, you start to seeing this same action up here near the top. I mean, you gotta think about it. Stock that just ran up from the 20s all the way up to the 70s. That's a lot, especially for a huge stock. So remember, resistance is like the ceiling. Once it breaks the ceiling here, um, and it gives you a real, you know, a super push, then it's just like a rubber band. It usually comes back down. So you're better at taking, you should be better at taking profits once it breaks out that key level here and start to go a little bit. Now you can start to take your profits in this area here. It may not be the dead top, but we don't look for the dead top. We look for the meat of the move, right? You want to take most of it, and because this is what can happen. So that's what a breakout is. Thank you.